Should you purchase property with cash? The good, the bad, and the ugly. When purchasing property, there's a number of finance options available to you, the most common of which is a mortgage. Now, when you're buying a residential mortgage, i.e. you're going to live in the property, like a first-time buyer or a second-time buyer, you're going to be putting in between 5 and 10%. But when it comes to a residential investment, like a buy-to-let property, you're going to be putting in a minimum usually of 25% deposit. Now, there are 20% deposits available, but most likely 25% deposit. Now, that is the slowest and lowest risk version of investing because you've got relatively low interest rates on your debt, the mortgage, and you've got a lot of slow people going through. So a lot of the operators at mortgage companies, because they're at low rates, they have to do thousands of mortgages every single week in order to make a profit. And the way they do that is by quick decision makings. So a lot of it, the people you talk to, is very computer says yes, computer says no type situation. Then you've got bridging. Now, bridging is called bridging because it's bridging the gap. So usually it will bridge the gap between now and the mortgage. For example, let's say you've got an uninhabitable property. You can't buy it with a mortgage because it's uninhabitable. You don't have all the cash available, but you know it's a great deal. You'll buy it with bridging, which again is usually about 80% loan to value in some great situations. Similar loan to values though, but much quicker and more expensive. At the moment, we're seeing rates of about 0.8 to 0.9% per month. Now that sounds really expensive, and it is, but it's not a long-term product. You're not looking to have bridging for a year or two. It's really sort of a 6-month turnaround. So you're going to use the bridge to buy it, get it refurbished, and then refinance onto a mortgage product. And whilst it is more expensive and slightly higher risk because of the expense, you're dealing with people that really assess the property on a case-by-case basis. So you don't go back to the mortgages with the yes or no situation. It's can't do that. However, have you considered this? So much more flexibility. And then, of course, we get cash. Now, let me be clear. I'm not talking about cash, walking around with a bag of cash in your bag, taking it to the bank and going, I'll buy that one. But what I am talking about is having the cash in the bank ready to invest. Now, isn't that great? What are the pros and what are the cons? Well, first of all, let's talk about the downsides of utilizing cash. Well, for me, there's really only one downside, and this is an economics term called opportunity cost. So the cost of opportunity if you invested it elsewhere. So when it's in the bank, you don't really need the money. My genuine opinion, if you have money in the bank and you're not saving for a specific purpose, is spend it and enjoy it, or even better, invest it and get an asset that's paying a dividend. For example, a stock, or in my case, property investment. Do not keep money in the bank. Why? Inflation. Inflation is, well, let's say 1% a month. I think real inflation's a lot higher, but that means the value of your money is eroding every single month. So if we're at 1% a month and you have £100,000 in the bank, that is like your money devaluing £1,000 every single month. Imagine your bank took £1,000 out every single month. How would you react? And yet, just because it's there sat in the bank, we don't actually see the real impact. So is opportunity cost going to really matter to you? Well, that's going to depend on how active of an investor you are and how much money you've got in your pocket. So for example, if you've got 50 grand, paying cash is going to be very difficult for a property. Whereas if you've got, say, 120,000, 150,000, that's enough to buy a decent buy-to-let investment opportunity that you can use to get into the best areas. Now, some people use it to get a bit of a discount, which I'll talk about. For me, I genuinely do not care about discounts. I think it's such a stupid move because normally they're in worse areas. But for me, it's getting access to the better areas because I can act with speed. Okay. Now the opportunity cost is, what if another opportunity come along? What if I was aggressive and something else happened? But that's the only downside of using cash in my experience. the positives are so much better. Before I go into that, if you're new to the channel and you're getting value so far, I would love it if you become a subscriber of mine so you can watch more valuable videos every week. The way you can do that is click the subscribe and the notification bell, and hey, if you're getting value so far, and destroy the like button for me before we jump into this section. So the first major positive of purchasing cash is speed, and the need for speed is there constantly. And over the last few years, properties have been going like that, and it's calming down a little bit now, but not in the best areas. So what happens is when you're a cash purchaser, you're able to go in and buy a property in the best area possible because you're able to move a lot quicker. If you're a vendor, for example, that needs to sell and you have to complete in 8 weeks, can that be done with a mortgage? Yes, but you're relying on a lot of dominoes lining up and falling at the same time in order to get that through. Whereas as a cash purchaser, an 8-week purchase is very, very easy. Believe it or not, the quickest cash purchase I've ever done, and this was me purchasing, was I agreed a property in the morning and I completed in the afternoon. Video on that later. Number 2, you can negotiate a bit more with the terms of the property. Now, this could be price, it could be bits that you want done to the property, it could be that you want the tenant out of the property before you buy it, it could be that you want a pre-inspection before the property, and so much more. Nowadays, it's not really about getting a huge discount because the property market is so buoyant, but it's about not paying over market. So a £130,000 property over the last couple of years would have been going like that for 140. But because you're a cash purchaser, you might actually be able to get it at the right price in the right location, giving you the best returns. Next is you don't need to deal with headaches. So for example, you don't need to deal with banks that are really slow, computer says yes, no, analyzing your financial situation, going through your financial statements with a fine tooth comb, and if you paid out £100 more this month, what was it? Why did you do that? Where is it going? Is that going to be a regular payment? You don't have to deal with the rigmarole that comes along with that. So for example, when you're buying cash, you can indemnify searches. Searches are a part of the legal process that can take weeks and weeks and weeks, sometimes months with some councils, and you can indemnify that instead, which is getting an insurance against anything going wrong that you would have found. And by the way, usually costs about the same amount of money, so why get them in the first place, right? Also, there's a lot less admin work. You don't have to be going through the applications for finance, the applications for your indemnity over and over again, your applications for solicitors and everything else. And finally, the big one for me is it eliminates risk. Now, property is an incredibly low risk strategy anyway, but by buying cash, you are eliminating the risk of down valuations, eliminating risk if the market does go down 5-10% and your lender gets funny, which doesn't really happen, by the way, but something investors seem to be scared about. But it eliminates any risk of market exposure, and so you can feel really safe. The other thing is when you've got your cash in property, it's really preserving the wealth. So outside of property, inflation is destroying your money. But when it's in property, because it's an asset that goes up with inflation, the higher the inflation that's going on, the higher the value of the property goes up. For example, the last 2 years where inflation's been about between 8 and 11% fluctuating through time, property has gone up about 26% over a 2-year period. Okay, so average of 13% a year. So it's actually enhancing your cash with a slower vehicle. So all in all, if you've got the cash there, make it work for you. And if you don't, there are ways you can raise finance, and this isn't the video for it, but if you want me to talk about how you can attract investors for joint ventures or loan, put investor in the comments, and if you're loath if you do it, I'll create some videos for you to give extra value. At this point, by the way, if you are one of those people who've sat with cash in the bank, but you don't have the time to invest it, that's where we come in with Aspire Property Group, where we actually build the portfolio for you. If you want to have a chat with the team and a free consultation session for the next couple of weeks, put APG in the comments, or I'll put a link in the description. Fill in your details and the team will have a chat. So that's it for today, everyone. Hopefully you got massive value from this video. Let me know what you thought in the comments. I'd love to do more videos like this for you if you did. and it helps me out a lot if you just tap that like button. It takes you 2 seconds, but really shows others the value of the channel and help me grow on here. And if you are new, you want to watch more videos, hit the subscribe and the notification, and you can watch the new videos.